Good day everyone. Today is Tuesday, May 3rd. My name is Michael Florentiades and I am the Chief Economist at XM.com, here to provide you with your Forex news update. The Reserve Bank of Australia surprised markets with a rate cut while the US dollar continued to drop to multi-month lows against other major currencies during Tuesday's Asian trading. The Aussie dropped more than 1 cent versus the US dollar following the RBA's announcement, from the 77 cents level down to below 76. The previous week's weaker than expected inflation rate for the first quarter played a key part in the bank's decision, as persistently low inflation in previous months, as well as in the recent data, were specifically mentioned in the accompanying statement as justifying a cut. On the other hand, there were also some positive news for the Australian economy, as building approvals for March rose by 3.7% month-on-month, instead of dropping by 3% as analysts had expected. Elsewhere, the Chinese Caixin manufacturing PMI for April missed expectations by dropping to 49.4 from the previous month's 49.7 and analyst expectations of 49.9. This may also have weighed on the Aussie. In this way, the Australian dollar had the unfortunate distinction of being the only major currency that was down against the plummeting US dollar during today's Asian trading. Dollar yen dropped to an 18-month low under the 106 mark to 105.70, while euro dollar climbed to an 8-month high of 115.65. Even the pound, which is currently plagued by Brexit concern, climbed above 147 versus the dollar, near its highest for the year so far. A key point of interest for markets is what the Japanese authorities might do to combat yen's strength, which is going to hurt both inflation and growth in the country over the coming months. A weaker than expected ISM manufacturing PMI for April, published the previous day in the United States, was one reason for the renewed downward momentum in the dollar, while there were some positive surprises in the respective final Eurozone manufacturing PMIs that were released earlier the same day. Also weighing on the US dollar were rather dovish remarks from San Francisco Fed President John Williams, who did not sound like the US Central Bank was gearing up to raise rates anytime soon. The US dollar has lost a lot of ground since the announcement of weak first quarter growth figures on Thursday last week. The remainder of the day will likely see the currency markets trading on existing themes, as only UK manufacturing PMI will come out in the European session and US vehicle sales will be released later in the US session. Thank you very much for watching and have a great day.